Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Airline hike surplus forecast ahead of budget. Gulf Bitters Airline on Saturday almost doubled its budget surplus forecast for 20 and 22 to 0.9% of gross domestic product thanks to booming corporate tax revenues, giving it extra resources to help consumers with inflationary pressures. The forecast was released ahead of the annual budget, which is due to be published next Tuesday, and the figures do not include any measures to be announced that day. Airline general government plans for the year is forecast to be 4.4 billion euros, 4.3 billion or 0.9% of GDP, up from July forecast of 0.5%, the Finance Ministry said in the statement. Finance Minister Pascal Donohoe said some of the surplus of over 4 billion euros would be used to fund a broad package of once-off measures to support citizens and business with the real challenge they face due to rising prices. He didn't say exactly how much would be spent on the measures. The ministry said that without the financial elements of its corporate tax receipt, which it estimated at 9 billion euros of a forecast haul of 21.05 billion euros, airline might be facing a deficit of 0.9% in 20 and 22. Corporate receipts monthly generated from big multinationals attracted to airline is in part. Corporate receipts monthly generated from big multinationals attracted to airline in part by its low corporate tax rate have surged in recent years and now make up almost a quarter of all tax revenues, but the government has repeatedly warned that they are volatile and cannot be relied on to fund ongoing spending. The ministry forecasts that the surplus next year would be 11.8 billion euros or 2.2% of GDP if no new budgetary measures were taken, thanks to a forecast record corporate tax take of 22.7 billion euros. Canada retail sales fell in July amid rate increases. Ottawa Reuters Canadian retail sales fell more than expected in July, though they likely rebounded slightly in August. Statistics Canada data show on Friday, indicating interest rates increases by the Bank of Canada are slowing consumer spending. Retail sales fell 2.5% in July, the first decline in 7 months, and missing analyst forecast of a 2.0% slump. Statistics Canada data showed lower gasoline prices drove the decrease, but sales volumes were also down 2.0%. A preliminary estimate showed August retail sales likely edge up 0.4%. Canadians may have started to react off to higher interest rates. Karen Carbonneau, Executive Director of Economics at CIBC Capital Markets, said in a note. The Bank of Canada lifted its policy rate by 75 basis points to 3.25% earlier this month and said it expects more increases will be needed. It has so far hiked by 300 basis points in just 6 months. While consumers are currently pulling back on spending, demand is still outstripping supply in the Canadian economy, said Royce Mendes, head of market strategy at this Desjardins Group. The Bank of Canada will have to forge ahead with more rate hikes, but it does leave us with more conviction that a 50 basis point move in October will be the final increase of this cycle, he said in a note. Money markets have priced in a 50 basis point increase in October and height odds of more than 25 basis point move to bring the rate of 4.0% by year end. The Canadian dollar was trading 0.3% lower at 1,350 to the greenback, or 78.92 United Cents. I think that's all from me. Don't forget to like, comment, share, and subscribe.